India is one country benefiting from investors pulling billions of dollars out of China amid its slowing economy. Market analysts say India's economic growth, large population, and policy reforms are all factors that are driving cash to India's equity markets. But there are also risks on the horizon. Rebecca Bundhun reports from Mumbai.
The team at this brokerage has watched India's stock market go from strength to strength over the past year. Foreign and domestic investors are pumping money into Indian equities, says Samco Securities head of research Apurva Sheth. And this is being helped by investor interest in China cooling down amid its economic woes.
Clearly, you see that investors want returns, and if they are not getting those returns in the Chinese economy, the capital will flow to some other place where they are getting good returns. So, yeah, I think that's what we are seeing globally, that people are moving out of China and moving to other countries where they see good growth opportunities.
Over the past year, the Shanghai Composite Exchange has fallen some 13%. By contrast, the same period saw India's benchmark BSE Sensex index rise about 17%. In fact, briefly last month, India's stock market overtook Hong Kong's, where many major Chinese companies are listed, to become the fourth largest in the world.
Typically, if you look at the requirements for a global investor, they are looking at investing in fast-growing companies and in thriving economies, right? And also sort of a political environment which is largely stable. And today, if you look at where India stands, it's sort of trumps almost every other major economy in all of these factors.
With the World Bank pegging India's economic growth at 6.3% in the current financial year to the end of March, this makes it the world's fastest growing major economy. It's also the most populous country. And in 2023, India's stock market attracted $20 billion in foreign inflows, according to official data. Wall Street giants, including Morgan Stanley and Goldman Sachs, have identified India as a prime investment destination. This month, Morgan Stanley Capital International, or MSCI, raises India's weightage in its global standard index, which tracks emerging market stocks, to a record high of 18.2%. In comparison, China's weight on the index is being reduced to 25.4% from 26.6% a year ago. Stockbrokers say investors are eager not to miss out on India's growth story, even though there are some concerns about overvaluation of equities. Observers will also be keeping a close eye on India's upcoming elections due by May. Prime Minister Narendra Modi is widely expected to be elected for a rare third term. While some experts say this could help with policy continuity and reassuring investors, still, other investors may be nervous about any potential surprises.
Maybe they might take some time because of the election, which is going to be a main driver in deciding whether you should come or not come. But once we have the government, I think you will have a lot of foreign investors or fund managers who have not yet participated in the Indian good story coming and participating, and the old ones who are there will bring in more dollars and invest in India.
He says geopolitical risks are also a matter of concern, but India has so far been comparatively resilient to external shocks. Analysts are widely expecting India's benchmark Sensex and Nifty indices, which include the country's largest and most actively traded stocks, to continue to rise this year, with many forecasting a double-digit percentage increase. They say sectors across the board are poised to perform well, even those seen as having been overvalued, including public sector banks and power companies. These could stand to benefit from the government's budget for the next financial year that was presented earlier this month, with the announcement of increased spending in areas including infrastructure. Rebecca Bundhun, CNA, Mumbai.